Hello everyone, welcome to the fifth webinar of a six-part series that Sparrowly Group are delivering on behalf of Hawkesbury City Council. Today's webinar is on knowing your numbers. This is a part two in our two-part collective series that we're running covering the basics on all things numbers, data and finances. My name's Giovanna from Sparrowly Group. For the last few years, Sparrowly Group has been working with a number of businesses in the Hawkesbury region and more recently have been running the Business Bounce Back Mentoring Program supported by Hawkesbury City Council. We're so pleased to see the incredible results from the businesses on this program. From a Sparrowly Group perspective, we've been working with our accountant, Bacchus Group, for 6 years. But day to day, I manage the finances and have built robust systems to ensure I have a clear line of sight of how the business has performed and where we're heading. This has been especially important in recent months, particularly with all of us being affected by the lockdowns in COVID-19. Finance is a big and important topic, and it's one that many business owners shy away from or are quite frankly petrified of. It doesn't need to be the case. So just some housekeeping before we begin. Your video and audio has been disabled for the presentation. This session will be recorded and a link of the video will be sent to all of you who have registered, as well as being published on the Hawkesbury Business Hub website. This will also include the presentation slides. Now, we welcome you to revisit the recording yourself and share it with colleagues and other businesses that you think it might help. Now, if you have any questions, please pop them in the Q&A box, which you can open at the bottom of your Zoom screen. We will collate them together and go through these at the end of the webinar. If you're having any technical issues, please use the chat box and we'll respond to you directly. So that you can focus on the information to come, we're going to turn off our videos now and let's get started. All right, so today we'll be talking about why finance matters, in particular knowing your numbers, business structure and accounting system, and why having a good support system can be beneficial to decision making. Let's get into it. Your numbers indicate how your business is going. Having a holistic view of your income and expenses will provide you clarity on when to make certain business decisions. For example, is there an opportunity to hire a new staff member? Or could you take on a job at a discounted price to help a not-for-profit? The best place to start is to know your break-even. In terms of what a break-even is, it's essentially our way of saying how much does it cost to keep the lights on and the wheels turning. The first step is to look at all your fixed costs. That is, the costs that don't change month to month, and they may typically be things like rent, wages, phone bills. Then you start to look at your variable costs. So these could be items such as repairs and maintenance, air conditioning, the cost of electricity, buying new assets for the office, and staff amenities like tea and coffee. The sum of these costs is the best indication of how much a business owner needs to invoice each period or to bring in to ensure that they're not going backwards. Once you've determined your break even, this gives you the opportunity to add your margin, which is a fancy word of the cream on top. Knowing your break even allows you to price your services correctly, ensuring you remain competitive. Anything above this figure is what you get to take home. Now on to cash flow. COVID-19 has highlighted the importance of knowing your business cash flow, allowing you to predict when money is coming in and when money is going out to ensure you remain cash positive. Sometimes being honest with suppliers about a small delay in payment or just making a part payment goes a long way, but communication is absolutely key here. Most accounting systems will allow you to produce a cash profit and loss. This means it will track your income and expenses based on what you have physically received and paid. So if you look at the profit and loss on your screen, we're typically looking at three main items. First of all, the total income. Second of all, total operating expenses. And third of all, the net profit or loss. In our example here, the net profit is negative, which means in this quarter, the business has spent more than it received, being a loss. This report also shows that the revenue received was not enough to meet the business's fixed costs, for example, wages and rent. As a business owner, this may lead you to either tap into your personal savings to fund the business, use existing cash reserves, and or review expenses and consider if there were any abnormal costs this period. For example, paying an employee performance bonus. We also recommend, so that you're not dipping into your savings, looking at your customer trends in paying your invoices. So if you have say you have 30-day terms, but you know your customer only pays after a couple of reminders, this means you need to take this into consideration when paying bills. The best report to look at for your debtors is the aged receivables report. And that's what we have here up on the screen. So if debtors, also known as receivables, are not in the current or less than 1 month column, we would recommend following up with your customers for payment or getting an idea of the expected payment date. Your first step may be a simple email with a statement of outstanding invoices, and if you don't hear back, following up with a call could be beneficial. It'll also allow you to make decisions in terms of your payment terms, and if you do need to make adjustments around your payment terms, this really helps you as a business to make decisions. Finally, looking at your numbers frequently will allow you to, first of all, compare your actual results with your forecasts, allowing you to assess if you can get a better deal for your dollar when it comes to things like phone plans, insurance, electricity. Now, we spoke last week when Ben presented about using data to both look back at the past and looking forwards by modelling and forecasting. So if you missed last week's part 1 of Knowing Your Numbers with Ben, and particularly around spreadsheets, we'll make sure we put that link in the follow-up email. The second thing that looking at your numbers frequently will allow you to do is to make an assessment on what you can do differently next time and see if there were any missed revenue opportunities. And an example of this is when you don't have enough staff to pitch or tender for new work. If this is happening on multiple occasions, sometimes investing in additional staff member, although initially may be difficult from a cash flow perspective, will pay dividends in the long run. Most accounting systems will allow you to include a budget so you can compare your actual results to what you forecast at an earlier point in time. As you can see in the example up here on the screen, this company has had major variances compared to their initial forecasts. And this happened to a lot of our small businesses, a lot of businesses in general, particularly around COVID. When running a business, it's important to understand why and what has caused the variance. For example, based on this slide, some of the questions we would look at would be, is the reduction in revenue a result of invoices being completed a couple of days after month end? Therefore, income next quarter will be higher. Or do we need to review the office expenses budget as this was more than double than what we had anticipated? Or why have wages not gone through this month? Simple reviews like this will assist businesses in having a better understanding of their business. Now, finally, let's talk about the ATO. As scary as they may seem, they are there to help small businesses. Now, during COVID-19, the ATO is assisting small businesses by offering payment deferrals for certain tax debts. So if you need a little more time to pay the ATO, it's best to contact your tax agent so you can discuss your options and they can help you with communicating to the ATO. But again, communicating early is always going to be the best chance of getting the help that you need. Now we know that not every business is the same, so what works for one business may not be ideal for the other. Businesses can be set up in a variety of structures, each having their own pros and cons. Typical structures are companies, partnerships, and sole traders. The simplest structure is a sole trader, which means you run your business under your own name, you pay tax in your own name, but you also take on all the liability personally. And there's little opportunity to be tax efficient once you make more than $180,000. Now, $180,000 is known as the top margin tax rate threshold. Now, a company compared to a sole trader offers reduced liability and can offer greater tax efficiencies. You should be structuring your business to align with your objectives and needs. For example, you may want to have the most tax-effective structure, even though it may cost you a little bit more to administer at year end. On the other hand, other objectives may be to have the most simple structure in order to minimize the cost of tax affairs. Now for the three letters that keep all accountants busy, GST. Not every business is required to register for GST. You're only required to register for GST if your current or projected GST turnover, that is gross sales less GST, is more than $75,000 a year. If your turnover is under $75,000 a year, then in most cases, the choice is yours. Now, if you don't register for GST, then you don't charge GST on your sales, but it also means that you can't claim back the GST that you paid to suppliers. We'd really recommend that you talk to your tax agent in respect to your structure and GST obligations. And I just want to point out here that just because you might be one structure doesn't mean that you can't change your structure, because businesses grow and evolve, and with that, that's why you have different structures to review. So working for your tax accountant is really, really important. So whether you use a shoebox for receipts, and it's okay if you do, but not ideal, an Excel spreadsheet or an accounting program, getting your systems in place will save you time at the end of a quarter, end of a financial year, and at tax time. But it doesn't need to be scary. Most businesses start with a basic reporting format, which typically means an Excel spreadsheet summarizing your income and costs. When you make the decision to move to an online accounting system, a few things that you should think about are, first of all, you want to choose an accounting system that you're most comfortable with. Look, we love Xero and we use Xero at Sparrowly Group, but it may not be for you. You have to pick the right accounting system that works for you. The second part is when transitioning into the new system, you should pick a clean date. What this means is don't transfer your data mid-month, like the 18th of the month. It's best to set it at the end of the month or the financial year. So once you've made that choice, get to know your accounting software, especially if you're going to do most of the bookkeeping yourself. Now, knowing the basics can go a long way to ensure you're able to obtain and extract numbers that are important to you. I can't stress enough here that you shouldn't be afraid to ask for help. By asking questions along the way, and I can tell you, I ask questions all the time, and I do the bookkeeping at Sparrowly Group. When you ask questions, it makes your accountant's life a lot easier. Sometimes the best time is spent also in the online free courses that your software provides, and most of them have great online free courses. It's a great way to learn the basics. So now let's talk about giving your business a financial health check. We certainly suggest to always look at efficiencies. For your software, your accounting software is a good place to start. So let's take Xero, for example. On a monthly basis, it introduces new functions such as cash flow or business analytics like debtor days. You want to have the right support. Now, we have found by having a good and trustworthy accountant gives you the financial support when and if you need it. So while it helps you with your reporting obligations, your accountant can give useful insights on how and what you could do in order to achieve your goals. Most of all, it's important that you know your break even. All right, so that concludes our look into knowing your numbers. A quick recap on what we covered off today. First of all, know your numbers and especially your break even. Always look for efficiencies. Your accounting software is a good place to start. Make your accounting system work for you. Have the right support. You want to have a good and trustworthy accountant that will give you the financial support when and if you need it. And like we mentioned earlier, having them will help you with your reporting obligations and give you useful insights on how and what you could do in order to achieve your goals. And I'm sure we'll talk about that a little bit later in terms on how best to work with your accountant. I can see some questions coming through on that. And know your accounting system. It's there to work for you, and they're very intuitive these days. And finally, again, know your numbers and don't be scared of your numbers in finance. Now, tomorrow, you'll receive an email from us with the recording of this webinar, presentation slides, and other links that you might find useful. Please feel free to share this with other colleagues or businesses that you think might find this helpful. Alrighty, let's get to questions. You can see a few coming through. Jackie, what do we have?
Great, thanks Giovanna. So firstly, what do I need to look for when hiring a bookkeeper or working with an accountant?
Sure. So first of all, there's a distinction between bookkeeper and accountant. Okay? Bookkeepers don't necessarily need to have specific qualifications to call themselves a bookkeeper. So technically, I am the bookkeeper at Sparrowly Group, but I don't have an accounting background. And a lot of people do go into business of bookkeeping without background. They've just been really good at, managing numbers and what have you. And that's great. But you need to understand that a lot of businesses make the confusion that they think their bookkeeper can answer a lot of questions and help them make decisions that an accountant would. And the accountant is up to date on all of the tax legislation and the constant changes that are happening, especially in COVID with JobKeeper and cash flow boosts and all of that. That's where you would go to an accountant. A bookkeeper helps you keep the day-to-day financial records up to date.
Yeah, that's a really great distinction. So secondly, if I'm looking to exit my business through selling or retiring, what do I need to do and what kind of reports would I need to prepare?
Yeah, sure. So you want to make sure that all the reports that we've mentioned earlier are up to date, but this should be part of just keeping a healthy business and keeping your financials current. And look, you might be preparing for exit. It might just come up when you least expect it, creep up, where someone might come knocking on your door and offer to buy your business, or there might be other reasons why you're exiting. Now, when looking at the valuation of your business, this is where you should speak to your accountant and get some advice around valuation. And there's different tools and methodology in terms of how to work out how much your business is valued. So can't stress enough to make sure that you get some advice. So in some instances, if you go to your accountant, if they are obviously already looking after your tax affairs, it may be a little bit of a conflict in the sense that there may not be that level of objectivity. So you may want to look at secondary advice for the valuation so that you've got the best possible advice that you can to make the decisions around exiting.
Great, thank you. And just one last question. Where should I start if I want to give my business a financial health check?
Sure. Always start with your expenses. Okay, as we mentioned earlier, unless you know how much it is going to cost to keep the lights on or the wheels turning, you will always be in the dark around how your business is performing. So setting a budget is important. Now, in some instances with some businesses, it's difficult to predict how much you're going to make every year. Okay, so to be completely transparent, from a Sparrowly Group perspective, we are consultants. So we don't have, it's difficult for us to forecast as well, but because we have historical data, we can make some educated guesses. And in some instances, that's what it has to be with your budget. So there's information that you will know, and there's some information that where you're just going to have to make some, like I said, educated guesses, but always start with the expenses first. And then you look at, okay, well, this is how much it's going to cost me to be running the business. Then this is how much we need to make during the year and per month. So every year, we develop up a budget just in an Excel spreadsheet, or we use Google Sheets. Now, again, I'll just go back to Ben's session last week, Know Your Numbers Part 1, where he talked you through spreadsheets and understanding data. So I do urge you, if you haven't watched that one, to go back and watch it, and also grab all the tools, including the templates, so you can, you've got something ready to go, because half the battle is actually setting up the spreadsheet if you're not, that way minded. So we've done all that hard work, to get you started and get the juices flowing. But setting a budget is important. We do that yearly, but we don't just set and forget. So we use what's called a rolling forecast method. So what that means is that we're constantly reviewing the budget against the actuals, and every quarter, once we finalise the BAS for that quarter, we pull down the actuals and we update our budget and our budget forecast. So we've got the current actuals up to to date, and then the budget going forward, and we are constantly refining our budget. So again, it can't be a set and forget. So we use this little rule, we call it the 5% rule. So every month when we do a deep dive into our budget, we ask ourselves, how can we be 5% more efficient? So this is not about like, oh no, we're not going to have the nice coffee anymore. This is more around, looking at things like, well, are we on the right phone plan? Could we be a bit more efficient? We're now paying for like 6 phones, for instance. Are we getting the best bang for our buck? Or is our utility provider the right provider for us? So it's really important that you're doing that regularly. You're always looking how you can be incrementally more efficient, because those little savings, they do make a big difference. And I mean, I tell people to do that in their personal life as well, with their personal budget, and we do that in our personal budget as well, because it's amazing, particularly as we're all in a whole, I guess, a world of mindless tapping with our credit card, how easy it is just to overspend. So it's no different when it comes to personal and business as well.
Great. Thanks, Giovanna. That's all the questions we've got. So back over to you.
No worries. Thank you, Jackie. And thanks for those questions. They were really great and well thought out questions. You can feel that you can reach out to us at any time. So what I have done here, I've put my details in. You are very welcome to contact me at any time with any questions you might have. I've also put our accountant's details, Lisa Milletta at Bacchus Group, and she has said that she's very happy to answer any questions that you might have, no obligation, just if you're really stuck, because I understand that not every small business may not have an accountant, or in some instances there may be some conflicting advice that you're getting. So there's nothing wrong with asking for a second opinion. So you've got both our details there. So feel free to get in touch. So our final webinar in the series will be hosted next Wednesday at 11:30. It will be on making your business accessible. A really, really important topic and very topical at the moment. We'll send details to register for it in your follow-up email, which will hit your inboxes tomorrow. Finally, I just want to say personally, thank you for your time in joining us today. We appreciate how important your time is, and we hope you enjoy the rest of your day. See you later.